Hi, it's Barry Dowsett. I'm the CEO of Mirrored Associates, and I wanted to share this video with you. It's all about claimable costs related to R&D tax credits, and also how those costs actually relate to the qualified activities within a project. Now, we all know that this wonderful government scheme, R&D tax credits, it's a great incentive to support R&D activities here in the UK, but it's also very important to make sure you only claim eligible costs and also apply those to the activities. I mean, the last thing you want is an inquiry from Hayton Revenue and Customs asking you to justify your costs. So, yeah, so this video is about that, and I hope you enjoy it, and let's get on. Okay then, so in terms of claimable costs, you have staff costs, externally provided workers, also known as agency workers. You have the subcontractors, software licenses, which now include data and cloud computing. That's from the 1st of April 2023. Great news. Consumables, and I'll come on to what kind of consumables as well. But let's go back to staff costs. First thing I want to point out is that you can have direct and indirect staff involved within an R&D claim because you have an R&D team. So that's the first thing to that. I mean, I'm not going to go into the details of that. That's for a separate video about what qualifies as indirect qualifying activities. But just remember, it's an R&D team. So in terms of staff costs, you have a gross basic salary, and that's for any taxable salary. You also have the employer's NI, that's employer's national insurance. You have the pension, company's contribution, and you have also what's called reimbursed expenses, which is, in essence, is employee goes and incurs costs like subsistence, fuel for the car, etc., and the company then reimburses that employee. That can be included into staff costs, which is great. You then have externally provided workers, which is agency staff. So that's from a staff provider. They work for you under your direction, under your control, and they've involved in the R&D activities. Yep, you can include those. You then got subcontractors. So this is when you contract out a piece of work to a subcontractor. They invoice you. If that subcontractor is what's called an unconnected, i.e. not related to the business, not a subsidiary, for example, the invoice is restricted to 65% of the value. That also actually goes for the externally provided workers. That's restricted to 65% of the invoice value. So yes, subcontractors. If you get this thing called a connected subcontractor, so let's say you've sent something out within the group, then you have to do this thing called look-through test. You may get more than 65, 100%, it could be less. I am not going to go into the details of that. It's quite a complex area. So that's your subcontractors. Software licenses used for R&D purposes, directly or indirectly. And as I said, now, so the cost of acquiring data, processing that data, and cloud computing can now be claimed from the 1st of April 2023. Fantastic news. And the last area is consumables. So the consumables, you've got the obvious things. You've got raw materials, you've got the electricity that's consumed in the R&D activity, but you've also got something called parts that are transformed. So you buy a load of parts, you then build something with it into a bigger part, it's transformed, it can't be used in its original state. Get those included as well. So yeah, so they're the key 5 areas. Now what I'm going to do is talk about how you apply that and what elements of a project qualify and how you apply those costs. Okay, so I appreciate this may not be huge in terms of, it might be difficult to read, but what the key here is that if you look at the blue area, the R&D project start and end dates here, that's your qualifying activity. So what goes on before that is non-qualifying, what goes on after is also non-qualifying. So you've got this company project, you do some market research, you set some project objectives, that's the first stage. You then realise that you haven't got the knowledge or capability in-house to develop that particular project and its objectives. You then go, right, okay, let's look out and see what's the state of art is, what we can find on the public domain. Is that knowledge and capability available? Oh, no, it isn't. Then you can start to think about the technical uncertainties and the challenges in the eyes of a competent professional. This is when you get into the element of qualifying activity. So within a project, it is pretty typical to find that an element of that project would qualify in terms of the activities and elements would not. So you're into the technical uncertainties, and it's the work undertaken to achieve those, to overcome those technical uncertainties is the element that you can claim. Once that's been achieved, that is when your qualifying activity finishes. It could be that you don't achieve that technical uncertainty, it's abandoned, therefore you can still make those claims, but of course that's the end. And of course, once you've done and overcome all the technical uncertainties, you then move on to the exploitation. So it's important to make sure your costs are apportioned across the non-qualifying and the qualifying activity. Okay, so I just want to say thank you. I appreciate, R&D tax credits can be quite a complex area. There are other videos that I'd like to share with you. Please sign up to our YouTube channel here. That'd be great. If you need to get hold of me, you've got my email address, and you've also got my telephone number. Any questions, feel free to give a call. I hope you enjoyed it, and if you need any help, you know where I am. Cheers, thank you.